In this video, I'm going to show you how to invest your first $1,000 into cryptocurrencies with an example portfolio of cryptocurrencies that you could consider buying to start your portfolio to get your feet wet into the cryptocurrency market. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic that you would like to learn some more about, please consider subscribing to the channel. Also, if you could just tap on the thumbs up button for the YouTube algorithm, that would be super, super awesome. And of course, make sure to click on the notification bell to know when I put out a new video. Now, just a quick disclaimer before we begin here as well. $1,000 is it's an example, right? If you are investing in cryptocurrencies, remember to never invest more than you can afford to lose. This is a highly volatile asset class. So that number, if it's $1,000 for you, or if it's $10,000 for you, if it's $100,000 for you, whatever it might be, just keep in mind to manage your risk here. And this portfolio that I'm going to share with you today is a lower risk portfolio. I think that's where, if you're a beginner in the market, you should be starting off at. You shouldn't be going for the super high risk plays. I know a lot of investors coming into the market, they want to gamble, right? And they look at cryptocurrencies like going to a casino. They're going to put $500 on this horse and $500 on that horse and throw some money into the roulette table over here. You can play crypto like that if you want, but just like a casino, you're likely to lose a lot of money. And I know you hear a lot of stories online about people who got rich off of investing in a dog meme coin, but you don't hear all the stories about people who lost a lot of money investing in dog meme coins and Ponzi coins and other just total garbage cryptocurrencies. People take on way more risk than they're willing to understand. And a lot of people, when they enter into the cryptocurrency market, they don't fully understand what they're investing in. They don't take the time to slow down, research what they're buying, understand what cryptocurrencies are. These are not stocks. That's something you really need to understand. These are not stocks. You don't get some kind of legal ownership rights by holding on to the tokens. These are cryptocurrency assets, magic internet money. So you have to understand them as such, and you have to do a bit of research before actually investing your own money into this asset class, because if you have a get-rich-quick mentality, you're much more likely to get broke quick in this market. But that being said, if you approach this as an investor with a long-term mindset, you're much, much more likely to actually get rich. That's the thing with crypto. You need to find the fundamentally strong coins, think long-term on your investments, and then invest accordingly. Act like an investor, not like a gambler. Investors have these lower risk portfolios for the most part. They take a time frame which tends to be a lot longer than a day, a week, or a month. We're talking years, right? So you're buying cryptocurrencies now, potentially for something that could be still part of your portfolio in 5 to 10 years. Think about that. That's investor mentality right there. So this is something for you to keep in mind. By the way, if you are new to the crypto game, then you're going to need an exchange account where you can go and buy your cryptocurrencies. My number one recommendation is Binance. It is the number one cryptocurrency exchange in the world. And if you use the link down below in the description to start your account, you'll actually get 10% off of your trading fees and up to $700 in trading bonuses. So you can go ahead and check that out. Now, that's only for international users, by the way. If you're based in the United States, you're not able to access Binance. My recommendation in that situation is going to be the Kraken Exchange. It's a great exchange for US users, fantastic range of coins, very user-friendly. So that is the option for you if you are based in the USA. And by the way, just one other thing to mention about your exchange account. Generally, you don't want to treat an exchange account like a bank. This is a marketplace, and yes, they do have really good security features, but at the end of the day, this is actually a platform for buying and selling things, not necessarily for long-term storage of your assets. That being said, all of these exchanges charge withdrawal fees. So when you want to move your assets off of the exchange into a wallet that you personally control the keys for, the network is going to charge you money and the exchange is going to charge you money. So if we're only investing $1,000, you may want to consider for the time being just leaving your assets on the exchange until you get a bit more of a portfolio size. Maybe if you have $5,000 or $10,000 worth of cryptocurrencies, it then makes more sense to withdraw your assets out of the exchange. But if you're just starting off with $1,000 invested, you could lose 4 to 10% of your total money invested just through withdrawal fees. And that obviously totally sucks. You don't want to do that. So for the time being, until your account grows a bit in size, you're likely going to want to just leave those assets sitting on the exchange. Again, that's not a long-term solution for your cryptocurrency assets. I don't recommend for you to treat it like a bank. This is just a reality. If you are investing a smaller amount to start with, those withdrawal fees from the exchanges can really eat into your long-term profits. So do keep that in mind. Now, let's get into this. The first coin that we're going to be investing in, we're going to be doing $250 of Bitcoin. Now, Bitcoin, it is the premier cryptocurrency asset, is the number one asset in the market. Most cryptocurrency investors, what they do is they invest in altcoins with the intention of seeing those go up in value real quick and then flipping them for more Bitcoin. Bitcoin is seen as the reserve asset of the cryptocurrency market. It is the digital gold of the cryptocurrency market. It's your long-term store of value, your hedge against, fiat inflation. So Bitcoin could be the cornerstone of your portfolio. That's why a quarter of our portfolio, in our example here, is going to go into Bitcoin. It can be your rock in the stormy seas of the cryptocurrency markets. So we get $250. That's going to be a quarter of our total portfolio. Now, we're also going to do $250 into Ethereum. So now we're up to $500 of our portfolio. So it's another 25% of our portfolio will be invested into Ethereum. So why are we investing 25% of our funds into Ethereum? Well, Ethereum is the premier smart contract platform. It is the second biggest cryptocurrency in the market. Ethereum is the home of the majority of tokens, which are built in the entire cryptocurrency economy. It's the home of dollar stablecoins. It's the home of decentralized finance. It's the home of non-fungible tokens. It's as itself an asset, very, very robust. There's so many exciting things happening for Ethereum. It's moving to proof of stake. ETH 2.0 is coming. Network sharding is coming. Fee burning is coming. A lot of exciting things happening for Ethereum in the near future. And of course, this is an asset that you can stake either on Binance or Kraken, whichever of those exchanges that you're using. So you can actually stake this asset. Now that does come with its own pros and cons. I made a separate video on staking Ethereum, so I would suggest that you watch that to understand the full picture, because staking Ethereum is not like staking the majority of assets, because right now Ethereum is in 1.0, but you can actually stake in Ethereum 2.0, but it's a one-way trip. So you send your Ethereum over there and it's just sitting there staking in Ethereum 2.0, earning you 6 to 7% a year in Ethereum. So that's paid out in Ethereum. So definitely a good asset to have in your portfolio. Now, Bitcoin and Ethereum in my personal portfolio, they are my biggest investments. Bitcoin is number one in my portfolio. Ethereum is number two in my portfolio. And those two assets form the majority of my total investment portfolio. So I'm very, very bullish on the future of both of these assets. Now, those are the two big dogs. But you're going to want to get some altcoins in your portfolio. Now, altcoins, that is the term that is used to talk about anything that is not Bitcoin. A lot of people these days also consider anything that's not Bitcoin or Ethereum. So we're talking about some of the tokens that are actually running on the network, or some of these smart contract platform competitors to Ethereum. So we're going to be looking at those. But the first alternative investment that where we're going to put $100 is actually into USD coin, which is a dollar stable coin. Now you might be thinking, WTF, Lark, why the heck would I be buying dollars. I thought I'm trying to make money here, not put my money from my bank onto the blockchain. What gives here, man? Well, there's a few reasons why I think that having 10% of your portfolio into stablecoins is a good idea. One is that you can never buy the dip unless you have some freaking chips. Super important to keep in mind. So many people wish they could buy these big dips when they come, and they come all the time in the market, but they don't have any cheddar to do that with. But if you have some stable coins sitting on your exchange account, you're ready. You don't have to wait for a bank transfer or anything to clear. You just have that fund sitting there, ready to buy some Bitcoin or some Ethereum or whatever the heck it is that you're buying on that particular market dip. And stablecoins are very, very useful for earning in decentralized finance. Now, right now, the majority of my stablecoins are actually in decentralized finance platforms. You can also use different centralized finance platforms like BlockFi, for example, to earn really good rates. So with something like BlockFi, you can earn 8.6% on your dollars, which is a lot more than the 0.01% that JP Morgan Chase Bank offers you for your savings account. That's really the rate that they offer. It's shockingly low. So you can put this in a centralized finance player like BlockFi, you get that 8.6%. You can go to a decentralized finance player like Wire Finance, you get 12 to 14%. You can go to some other decentralized finance protocols and get 30, 40, 50% on your dollars. That's insane. That's a really, really good rate of return. So having a bit of dollar coins in your portfolio, I think, is an advisable decision. Next, let's talk about Chainlinks. We're also going to do $100 worth of Chainlink. This is 10% of our portfolio. So now we're up to 70% of our $1,000 budget filled. So Chainlink, this is a data oracle provider. So for anything to be able to happen in decentralized finance on the blockchain, you need to have accurate price feed data. Now, you need to have that be decentralized as well, because if you're relying on centralized services, those can be manipulated. And when you have so much money on the line, literally, the cryptocurrency market is worth like $1.7 trillion. You have that much money on the line, you can't risk people manipulating the market with bad price feed data. So that's where Chainlink comes in. They have a decentralized network of oracles. This is by and far the most used oracle provider in the market. They have more partnerships and connections than anybody else. They are the clear leader right now when it comes to being at the just center of everything when it comes to data in the blockchain world. So that's why we're going to put $100 into Chainlink, make it another 10% of our portfolio. This is kind of a cryptocurrency blue chip, if you will. They're an established leader within their space. The next one is a decentralized finance protocol called Aave. So we're going to put another $100 in here. We're now up to 80% of the portfolio filled out. Now we're putting $100 into Aave because this is the premier DeFi protocol. Aave currently has billions of dollars locked up in its portfolio. Now this is total value locked just on the Ethereum mainnet. If we account for Polygon, which is an Ethereum sidechain, this figure is actually over $20 billion. So there's 4 to 5 times as much value locked up in their borrowing and lending protocol as the market cap of the coin is itself. So this is a very powerful decentralized finance product. Literally, if you can imagine borrowing or lending, no bank, no BS, just a piece of software in the middle. It's very, very powerful. So Aave is a great one to have long-term in your portfolio. It's a very powerful decentralized finance player. It's a market leader in its field. Now, those are both Ethereum-based tokens. So Aave and Chainlink, they actually live on top of Ethereum, much like the USDC dollar coins do. It's also in some other blockchains, but these are Ethereum tokens. So we've now invested a pretty good total percentage of our portfolio into the Ethereum network. So we had 25% in Ethereum, 10% in USDC, 10% in Chainlink, and 10% in Aave. So 55% of the total portfolio here, it is in the Ethereum network, whether directly or via its tokens. But Ethereum is not the only game in town, man. Lots of other great blockchains out there. Some up and coming ones is where we're going to put the last 20% of our money in our $1,000 portfolio here. So we're going to put 10% into Polkadot. Now, Polkadot was actually created by one of the co-founders of Ethereum. He split off to do his own thing and create Polkadot. In fact, the other cryptocurrency we're going to talk about in a second was also created by an Ethereum co-founder. More on that in a moment. Now, Polkadot, people are getting very, very excited about this network. There's been a lot that's been built for this network. They're launching their core products in the very near future, which are called parachains. That's going to really bring the Polkadot network to life. Right now, the Polkadot network, it's alive and running. It's just not a fully featured network yet. But by the end of the year, we will see that fully featured Polkadot network coming through. So if you're buying this asset now, you're getting it before the wider market picks up on it and we see an explosion of decentralized finance products and NFT products and all these different things starting to happen on the Polkadot chain. So this is one that's getting another $100 worth of our investment, 10% of our portfolio into a major Ethereum competitor, or we could call it an Ethereum colleague, because realistically, the future of the blockchain world is one network and many different blockchains, all fulfilling their different niches and roles and helping lift the heavy load of throwing over the global financial order. So 10% into Polkadot. And now both Polkadot and the next coin we're going to talk about, Cardano, they can both be staked. Now this essentially means that you put your coins into the network and you get rewards paid out in those coins back into your wallet. Now for Polkadot, that's currently around 12% a year, which is obviously a great rate. For Cardano, it's around 5 to 6% a year at the moment. Now both of these coins can actually be staked on the exchanges. So you can stake them on Binance or you can stake them on Kraken. You can also withdraw those cryptocurrencies to your personal wallet and stake them there. Polkadot and Cardano actually have quite low withdrawal fees from the exchange. So if that's something you wanted to do in terms of getting those into your personal wallet, or if you just wanted to handle that via the exchange, they make it super, super easy to do that. But don't miss out on those rewards, because you can be earning with basically all these cryptocurrencies that we've talked about today. And if you're not earning those rewards, you're just throwing money away. And you don't want to throw money away. It all adds up. So don't miss out on those sweet, sweet rewards. Now, the final coin we're going to talk about here today is Cardano. Now, Cardano is one of the up and coming smart contract platforms. They are right now in the process of launching smart contracts, so becoming a fully functional blockchain. So they've just pushed that out to the test net. We should see it hitting the main net for Cardano around August sometime approximately. That's very exciting because it means that the Cardano ecosystem is about to finally explode. We're going to see NFTs and decentralized finance and borrowing and lending and gaming and all this stuff coming to Cardano. So it's going to be a really big moment for them. So that's why we're going to throw our last $100, the last 10% of our portfolio into Cardano here. Now look, I just want to point out this example portfolio here for you. This is just an example. It's a lower risk portfolio. We're focusing really on top coins. Most of these coins are in the top 10. And Aave, I think, is the farthest one down, and it's, still top 27 coins. So it's very high ranking coins. These are all coins with very well established positions in the market. So this is a lower risk portfolio. This is that long-term investor portfolio, investing in some of the key smart contract platforms, some of the key protocols, building on those smart contract platforms. Now the question then becomes, okay, Lark, I've invested my $1,000. Now what? Now what, dude? Well, there should be a plan for when you would like to take profits on these or to sell these. Look, I've made a lot of videos on the topic of taking profits. I would encourage you to go and watch those, especially if you're new to the market. Just look up Lark Davis, how to take profits. I've done 3 or 4 videos on the topic. They're all good, so check any of those videos out. But we're not just talking about selling. We also want to talk about buying. Because realistically, your first $1,000, once you get a little taste of the crypto market and the crypto gains, it's probably not going to be your last $1,000 into the market. So then the question becomes, how do you invest? Well, the best way, of course, is to cost average in. So let's say that you wanted to invest $100 a week into crypto. Every Friday, you send $100 off to your exchange account. You could just buy all these coins in the same percentages. You buy 25 bucks Bitcoin, 25 bucks of Ethereum, 10 bucks of USDC, 10 bucks Chainlink, 10 bucks of Aave, 10 bucks of Polkadot, and 10 bucks worth of Cardano. You could keep it really simple and just do that. So that's, your 100 bucks every week going in, your cost averaging in over time. You're taking that long-term investor perspective here, and you're getting into these assets, and you're getting an average price over time by continually buying into them. So this is what a lot of investors do for getting access to these assets for the long term. Now, you can, of course, buy new coins as well. Obviously, that's something that you can do. My thought on that would be, don't become seduced by every single coin that you come across. There are more than 10,000 cryptocurrency assets right now. And that's just the ones listed on the exchange, the token aggregator sites like CoinGecko. There's more than that out there that have been created. So there's a lot of coins, and you don't need to invest in every coin to do well in this market. You could have a portfolio of 4 or 5, 6, 7, 8 coins and do totally fine long-term in this market. So before you add a new coin to our example portfolio here of 7 coins, just think long and hard. Why am I buying this coin? Is it a good idea to buy this coin? Etc., etc. Go through that process and think about it before adding in new positions. Do I have the time to keep up with another investment? Because you do need to watch news and keep up to date with what's actually happening with your coin, with your investment. It's an important part of the process for an investor. Anyway, those are just my 2 Satoshis for today. Your question, what one coin should I absolutely have included on our example portfolio here? What is the coin that investors should absolutely be buying? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.